Guys, could this be it? Today we are having the fifth test of 71,000 on the daily Bitcoin chart. Let's take a look. You can see going back to early March where Bitcoin first had its tag of a new all-time high up here at 73K. And then over the last couple of months, we've now had 5 attempts to get through 72K here. What do you guys think? Is this it? Are we about to blow, or is this a bull trap and we're going to reverse?
It feels like it's it. I don't know. The moment, I don't know.
So Nikki's bullish. Trav, what do you think?
Oh yeah. If I need the Jim Cramer sound effect, buy, let's go.
All right. Hell yeah. I think, okay. So we're all in agreement. I mean, based on this chart, it just looks so strong. And I put out a tweet yesterday, basically comparing this price action to in 2017, whenever we were testing the $3,000 breakout zone. I'll go ahead and pull this up for you guys, but you can see here, look at the similarities just in the price pattern, how we had basically a fake out breakout around 3K, had a pull back to the 100 period moving average, and then finally had like an inverse head and shoulders here. And see this yellow circle? This is where I think we are today. So will we go up as much as we did in that cycle from 3K to 20K? I don't know. I'll talk about my profit targets here in a minute, but I just think that this breakout is looking more real than in 2021 when we had that kind of fake out breakout on that second attempt. So yeah,
I mean, look at the S&P 500 right now. Like, risk is on and popping right now. GME is bouncing. The S&P 500 is about to break out to new all-time highs again. Bitcoin has a very bullish chart right now. So it seems to be kind of following what the S&P 500, Bitcoin seems to be following a bit what the S&P 500 is doing with those higher lows, bumping into that resistance zone. So there are a few similarities, but overall, it just looks like everything kind of wants to break out here in terms of risk assets.
Well, I agree about the S&P and I agree about Bitcoin, but what I don't really agree with is GME. I mean, it is getting a bounce.
What a mess.
But what a disaster. What a crazy mess over the past couple of weeks. Trav, I know you've been following this closely and have tweeted about it and talked about it in the wealth building community stock market update classes. Walk us through what's happening. And is Roaring Kitty either a genius, a scamming pump and dumper, or something else?
Yeah, big question.
That's a good question. As always, GME brings out the worst in everyone, I think. Both on the short and the long side. I mean, some of the posts today I've seen about, the evil hedge funds are not hedged on their short call positions. I mean, like, God, how many things do I have to correct just using basic finance knowledge? But, Roaring Kitty, I think he means well. Like, I genuinely, if you go back to what he was doing back in 2021 or 2020, I mean, look at what he did before GME went parabolic. He wasn't trying to pump and dump the stock. He built a big position. He held it with diamond hands, for a long time. And he continued to hold a significant amount of it even after it went parabolic. So, whether he's right or not to hold that position through all of that, we could argue about, but I do not think his intentions are necessarily bad. Now, this time is a little bit different in terms of he's got shorter term call options as a big percentage of his position, which does raise some eyebrows. And in fact, it's already receiving some attention from regulators. So he made his return to Reddit. What was it? The end of last week, or I guess it was right before the market opened. So it was on Sunday. He posted an update on his GME position where he all of a sudden had 5 million shares and then 12 million, well, actually 120,000 options contracts, which, essentially would convert into 12 million shares if they were exercised. And so these are very, very large positions. At cost on Sunday night, I think it was something like $180 million worth. In the peak of the 2021 boom with GME, his position updates indicated that he had a max, I think, around 40 or 45 million at the peak. in terms of value in his account. So he's gone from, call it 40 to 50 million back then at peak, to all of a sudden now pushing now over 200 million as of this week in his portfolio. So there's a lot of questions here. Like, where did the incremental capital come from? Some people have speculated he's got a backer or that he's raised some type of fund. I think if he had done that, I don't think he would be able to have been posting these last few weeks. What I speculate happened here is that he actually built a position a couple weeks ago before he started posting those memes to Twitter. And that's how he turned probably 10 or 20 million at that time, after that big first initial burst that we saw, when GME went from $10 to, like, I think, what was it, 70 on that first spike up a couple weeks ago.
Mm-hmm.
If he had an options position at that time when he was just posting memes on Twitter, then that could have significantly multiplied his capital on that first spike back in early May. And so that may be where he initially multiplied his capital and then started to build again into the stake after the stock came down. And so that first May boom, would have potentially been the event to multiply his capital. So it's really strange, though. The short-term options thing is weird because it has a lot of potential for bad incentives here, because he's got a couple of weeks now. He's basically has like less than 3 weeks to figure out if he's going to exercise these options, if he's going to sell them for a profit. If he does sell these short-term options for a profit, there could be a case for market manipulation against him. Now, it would be a very weak case because he hasn't actually spoken. All he's done is post his positions online and post memes. But lawyers can read that very different ways, right? So there would be potentially a case against him, even though I think it would be a weak case. A lot of different angles to the story. I don't know. We could go in a bunch of different directions, but I think, it's going to be very interesting to see how it plays out because of these short-term options. He's got some serious decisions to make that will affect the market in big ways here over the next few weeks.
Yeah, I'd like to know if he sold the top into that $70 range or if he, it would just be very telling to see what moves he's actually made, because it does seem fishy. And I don't know. It's funny though. This is bringing up the debate of like, what is market manipulation, and like, why is he not allowed to do certain things that, politicians, and, the whole thing over the last year has been like how much money people like Nancy Pelosi have been making on insider information as politicians, which is somehow perfectly legal, but maybe posting memes is not. So this definitely brings up an interesting debate.
Politicians are absolutely insider trading. There's also more of a gray area too with things like hedge fund managers. They often go on CNBC and talk about positions, or, Kathy Wood goes on and talks about her positions. People try to follow Kathy Wood or Warren Buffett into positions. There are 13 Fs that people look at when they get published for hedge fund positions, and people will pile in. And so it's not like he's the only one posting his positions. And I think that would be a very hard case to make, that just posting your positions online is market manipulation. But again, I think when you throw in short dated call options, that starts to push a little bit closer into the market manipulation front, because you do have a situation where he understands that his tweets do move markets because of his large following. And so even posting without saying anything, even just posting a meme or posting your positions, is going to move the market. And so if you trade on that, if you post and then all of a sudden you were to flip and start selling those call options into the pump, again, the lawyers could have a case here, but I hope that we don't see them go after him unless he does something really dumb. What I think he may end up doing is he may actually start to exercise these call options slowly in chunks over the next couple of weeks, rather than waiting for the day of expiration. And if he does that, he will build up potentially a very large stock position and become a significant stockholder in GME. I think he'll become like a 5% stockholder. So that's where I think it could end up going, but he's going to need a significant amount of capital to exercise those calls. And Morgan Stanley, who owns E-Trade, who's the broker that he's using, they honestly, I don't know if they're going to allow him to actually exercise those calls without putting up a significant amount of capital. So he may need a financial backer to actually exercise the calls. I don't know. The whole thing is just wild. And
yeah, I mean, hasn't E-Trade been talking about actually banning him from the platform?
Yeah, and that would be the absolute dumbest business move they could ever make. Now, Morgan Stanley, after they bought E-Trade, it seems like they haven't really cared about the E-Trade platform so much. So they may be willing to let E-Trade die. I think it would, again, be a very stupid business decision. I think they would see a massive outflow of accounts from E-Trade if they did that. But that's something that they could do.
And I mean, then again, look how bad Robinhood screwed up, and look at their stock today.
Yeah.
So
People don't care.
yeah, I mean, people have a very short memory, and have, off of the bottom of last November, I mean, yeah, Robinhood's up almost 200%. So granted, it hasn't recovered from the IPO, but it did have a nice rounding pattern and a breakout. And yeah, I mean, people forget. And
I do think, sorry, one thing I
ahead.
did want to say for the people that are looking at investing in GME over the next few weeks, or people that are investing in GME, one of the things that's kind of going viral on Twitter today is this idea that, DFV bought 120,000 call options, and all these people are posting saying that the market makers or the hedge funds or whoever sold these calls to DFV, to Roaring Kitty, are not hedged. That's completely wrong. So a lot of investors are saying that, like, oh my God, these calls are not hedged. This is going to cause a massive short squeeze. That's just not true. What happens when a market maker sells a call? If I buy a call and the market maker is selling me that call, that market maker goes out and immediately delta hedges their position so that they are delta neutral, meaning that it doesn't matter what direction the stock moves, they are hedged. They can do that by buying shares or buying put options. They don't have to go anyway. So it's like, if you understand how market maker hedging works, that this is not going to create some mother of all short squeezes. So that whole thesis, I think, is busted. If you're buying GME today, you better have a thesis that doesn't revolve around a massive squeeze because of this, call option position. And I think we've also seen that this second spike has been much less significant than the first one we saw a couple of weeks ago. And the reason for that is, these pumps are starting to have less and less effect. Like they're less of a surprise. And there are a lot of different participants on both sides of this market in GME. So I don't think this idea that they're going to get a mother of all short squeezes is very valid.
Yeah, this whole thing is just a masterclass in the madness of crowds and how people will create these false narratives and just, spread misinformation. And but yeah, to your point about like future pumps not being as strong, what happens is there's so many bag holders from the pump a couple of years ago that are like, oh, I'm back to break even, or I'm not as far in the red. Let me go ahead and just cut my losses on pumps. So it's like those bag holders become selling pressure, and that's why it's like a ball. It's like the first bounce is the biggest, and then the second, and boom, 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 and slowly it just loses momentum. But Nikki, you were going to say something?
Well, I was going to just say that first of all, I have three things. One, I would imagine he would have spoken to some lawyers before tweeting. I would hope that he's not that stupid to put his riches at risk and his reputation at risk. But that's besides the point. We'll have to see what happens there. Two, he's going to probably be okay either way. He can probably lock in his original riches that he made, his original 40 million, if he manages the trade well. But granted, I don't know how good of a trader, the technical trader he really is or not, but we're going to find out, I guess, on that too. Like, I hope he's not dumb enough to put all of that capital that he made at risk. He's probably going to be fine either way if he has his mental stop loss in place, right? But what worries me the most is, in relation to what you guys are talking about, is everybody else. He's going to probably be fine, but a lot of people probably didn't get the same cost basis as him. They probably chased this. And even though it's bouncing a little bit today, the question is, I had someone reply to my tweet about this, talking about they're in it as a lotto for 350, 400 a share. So there are people out there that are still thinking that this stock is going to go bananas. Well, I don't even know what percentage gain that would be. It would be insanity.
10x.
Okay, there you go.
Yeah,
so
literally a 10x. Yeah.
Basically, there are people out there that are chasing him, following him, that are putting money in, thinking that the price is going to do that. Now, as we know, anything can happen, but as we know, being in the markets long enough, especially charts like this, I'm worried about people getting burned again on this situation. They will not be okay. So it is very frustrating. Could the thing squeeze again? Sure. But is all of this going to actually work for Roaring Kitty again as perfectly as it has in the past? Is my question. Like, usually traders, they get lucky, they have, that good trade, and then they get greedy. Is Roaring Kitty being greedy, or does he know something that we don't know?
I think that's the best question to ask, right? Because everybody's assuming he's some genius trader and he's like
And I
some
don't think he
market
is.
wizard. And I'm like, I don't see that. I mean, he did find the short squeeze, but you guys found the damn short squeeze. You guys bought GME at $4. Granted, you didn't hold till the real squeeze, but that's okay. But yeah, I mean, we got to get away from worshiping these people and like blindly following. And here's an example, right? It's like, if you look at what actually happened, and if we turn on, let's go intraday, the market opened. So after he tweeted the Uno card or whatever, market opened at $40, and was anybody that bought off of market open was immediately down like 30%. So that's just a masterclass lesson in not emotionally chasing price action. You have to get in based on the technicals, even if you're chasing a narrative. It's like, you got to look at price and not just randomly throw orders into the market, because you're likely going to be on the wrong side of it.
And every single pop has been sold because there's a lot of bag holders in this from before. So my original thought on that first squeeze when it went to 70 was, this isn't going to be able to hold because there's too many people, too much selling pressure, people trying to get out while they can, right? But of course, the question is, does this bring a whole new wave of buyers that just makes it do something none of us expect? But the odds are that these pops are going to get smaller and smaller and smaller. And that's why I'm like, why is Roaring Kitty putting all this on the line, doing all of this? Like, what does he know? Like, what, because to me, it just feels like greed at this point, but I don't know.
I know you had a thought that this could be something much different on the fundamental side, that GME could be turning into a different company. Do you still believe that is a possibility, or is that less likely now?
Yeah, 100%. I mean, I think the wild card is GameStop, the company itself. And, you have a CEO at the helm who isn't taking a salary, who has, built a large company in Chewy before. He's been involved with some other retail turnarounds that didn't work out so well, like Bed Bath Beyond. But, he owns 12% of GameStop. GameStop, I believe, will be turning itself into something different in the years ahead. They now have $2 billion of net cash on the balance sheet. And, the retail game business is not doing well. That part of the business continues to bleed out. They pre-announced their quarter a couple of weeks ago and said that they're actually going to be well below their previous guidance for the quarter. But I think in the months and years ahead, we will see GameStop transform itself. They're either going to do big M&A, so they're going to acquire something significant, or they're going to start investing in a portfolio of other companies, the way that Warren Buffett kind of transitioned Berkshire Hathaway, which used to be a textile business in the 1940s and 50s. He transformed that into his investment holdco, which, over time generated tremendous amount of value. Now, is Ryan Cohen a Warren Buffett? I highly doubt that, but there is the possibility that they can compound value with that $2 billion of cash on the balance sheet. Today, if you were to value that business today at like 1x price to book, it would be a $7 stock. And that's kind of the problem. It's like today, the stock is trading in the market at 30. Book value, even with $2 billion of cash on the balance sheet, is like basically $7 a share. So you're already putting a pretty big premium on Ryan Cohen and GME's ability to shift the company over time. Now, there is upside. Like, if they compound at 15 or 20% for 3 decades, the way Warren Buffett did, this stock can be a 50x. Over a very long period of time, mind you, not like 3 weeks from now. And so there's a potential long-term story, a potential bull case here that does really make sense. And if you're Roaring Kitty and you believe in that long-term bull case, and you believe in the ability of Ryan Cohen and the board to build value and change this business over time, there would be a reason to hold. But again, I think that's a very different prospect than trying to get the mother of all short squeezes by the end of June. And so I think it's good to be clear about, why are you buying into GameStop? If you're buying just to follow Roaring Kitty, that could end very badly. If you're buying because you believe Ryan Cohen and this business is going to shift into something very, very different in the coming months and years, then you may have a thesis, but you're also paying a pretty high price for that today.
Right.
Well said, man. All right. Yeah. Let's move on from GME. I know this is something that gets a lot of headlines, but we're not actually trading it. I don't think you guys have traded it, right? So
Been out of it so far, but maybe
Yeah.
there'll be an angle at some point for us.
Yeah. Okay, cool. Let's move on. So let's talk about my favorite thing to talk about, which is politics.
Yeah, right.
Just kidding. I absolutely hate politics. I hate the political climate that we're in, but there is something interesting that I thought would be just important for investors to know and to think about. We've talked a little bit about the political division in the US over crypto. And there's something really interesting that I think is a big possibility and maybe even like a betting opportunity. I don't know. I don't bet on long shots like this, but look what the Wall Street Journal published yesterday.
Trial balloon.
Yeah. So behind closed doors, Biden shows signs of slipping. So there's all these articles coming out talking about Biden's mental health and how he's declining. And I mean, if you just watch the guy, like, I don't know if you guys feel this way, but whenever I watch him speak, it's like, I just feel uncomfortable. Like I cringe because you're just like waiting for him to screw something up. And like, so Ryan Selkis posted this. He said, the world's most mispriced market right now is the fact that over 90% of bettors on Polymarket are assuming that Biden is going to be the Democratic nominee. And so there's some chatter about Michelle Obama maybe stepping in. Yeah, I don't know. I mean, this is a big question.
She'll never be president. I heard her on Oprah. She said she'll never do it.
I have a position for this. I have this.
Okay.
I have a position on, and I actually talked about this in the community. Funny, believe it or not, about a week ago in the crypto meme chat of all channels, talking about crypto memes. And it is something I've been thinking about. In all seriousness, I've been thinking about this idea that what if Biden doesn't make it to the election, or what if he makes it to the election and, you know, even if he were to win, which would be surprising given the odds right now. But even if he were to win, what are the odds that he actually makes it through his 4-year term? I think that's all very low. I think that if you were to take the cumulative probabilities of him getting to the election, winning the election, and making it through the election, I think it's a very, very low probability. Or sorry, getting through his term. Just because of what we're seeing, what we've seen with our own eyes, like you said, and now we're starting to see whispers coming out in the media. And I think that's a big deal because previously it's sort of like the media has been quiet about it. Maybe they've been afraid of affecting the elections, but you know, Biden is down to Trump in a lot of the major polls right now. He seems to be losing momentum, and he seems to be mentally losing momentum. And so I think there's a decent chance. I think Selkis is right that I think there's a decent chance he doesn't even make it to the election. I think the Democratic Party has been using his administration to kind of implement a lot of their policies. And he's been more of a figurehead. And so the Democratic machine, if you will, the Democratic Party machine may decide at some point that he's a lost cause and they need to actually have someone else step up. And so I do have a meme coin play on this. It's not really the best investment play, but there are ways to play this via meme coins because as we know, there've been like presidential meme coins that have been doing well, like Bowden and Trump and things like that. And so I mentioned in the community last week a potential meme coin play on what if Biden doesn't make it to the election. And I think there's a couple ideas there. But the bigger idea is that I think we could see something crazy happen before the elections get here with regard to Biden as a political candidate.
I agree with you on that. I think this is something that a lot of people are just assuming it's going to be Trump and Biden. And yeah, I don't know.
I've heard that as well. But the question is who? I've heard that they might pull him, you know, and put someone else in.
Well, here's what the markets are saying. You know, Michelle, I mean, I don't know, 6% are still saying Michelle. If it's not her, Gavin Newsom, and then Kamala way back here at 2%. So yeah, I don't know, maybe RFK.
Wow, Elizabeth Warren. Well, that would be a nightmare.
I mean, there's a lot of people that are saying she's really running the show behind the scenes anyway. So
it's going to be very interesting. The debates will be very interesting.
Yeah. I'm not going to watch them.
No, you got to watch for entertainment at this point. I mean,
that's right.
Our politics are literally entertainment more than anything else at this point. It's terrible.
So check this out. So at standwithcrypto.org, you can see the list of politicians that are either pro or anti-crypto. So if we look at, say, senators in the Republican Party, and then we sort by their stance on crypto, you can see all but 2 are strongly against, with a few that are neutral, but most of them are either supportive or strongly supportive. When you go over to the Democrat list, there's only half a dozen that are strongly supportive, and most are strongly against. So
what is driving that exactly? Like, is it just Democrats wanting control over the financial system? And this isn't like, I don't care one way or another, but what drives that partisan view?
well, to me, it's just,
Why?
it's so silly. It's just so stupid to take that stance. And the fact that it is becoming such a partisan issue, to me, is like crazy. But the other thing, though, is when you look at, let me pull this back up. When you look at the House of Representatives on the Democrat side, there are a lot more that are strongly supportive. So what I think this is people just hopping on Elizabeth Warren's train for some reason. I don't know. To me, it just doesn't make any sense. Like, why would you take this stance? It's not gonna, I don't know.
I do think, I mean, one legitimate reason why some politicians have been against the crypto ecosystem is because there were a lot of scams, especially in the early days. We had failures of exchanges, Mt. Gox, FTX, many others as well. You've had consumers, a significant amount of consumers that were hurt by that. And so, Democrats' natural reaction is to go protect everyone from financial fraud or whatever. And to some degree that makes sense. And to other degrees, obviously it's like, an attack on freedom. And so, yeah, I think that's one legitimate reason. Another reason might just be age. I mean, the age of your average US senator has gone up quite a lot in the last decade. And so it could just be an age thing. They don't understand crypto. They don't want to understand it. They're set in their ways. And that could be another reason for that.
That's a good point. Yeah.
Yeah. And the SEC has been losing more cases recently. Even today, there was more news that came out. And so I think the tides are shifting, and, I think smart politicians are not going to take the big government, we're protecting you side. I mean, they just realized that doesn't work. I mean, who did the SEC save at all? Right. They didn't save anybody from FTX or Mt. Gox or any scams. I mean, they've just gone after legitimate projects, and anybody that did come in to register, they just sued the crap out of them. So yeah, I don't know. It's just a very silly stance, I think, to take, and just not a smart one if you're a politician. Like, I don't know. Anyway, okay, moving on. So let's talk about Bitcoin price targets.
I hope that's the last time we have to talk about politics.
Yes.
Oh, it will not be. Not by a long shot.
It's only going to get worse over the next few months. Yeah.
Yeah.
But let's just do some more TA on Bitcoin. I know that's what people want anyway. So
give the people what they want.
Yeah. So let me say this. I have a few different capital buckets, right? So I have swing trading capital buckets. I have position trading, where I'll hold, for a year or two and trade the larger market cycles. And then I have my cold storage, like HODL stack, that I'm never going to sell unless something goes absolutely insane and I have a reason to sell it. But looking at this market cycle, I've been talking about some ranges in the community, and what I hate to throw out like pie in the sky profit targets, because one, historically, I underestimate what Bitcoin can do. Like, I remember when it was at 1,000, we were like, oh man, can you imagine what the world would be like if Bitcoin was at 10,000, right? So I always underestimate what Bitcoin can do. Number two, I don't want anybody to like trade off of my longer term targets, because my cost basis is really, really low. Like, I was buying in the 20 and 30K range, and I recently added some more, but like again, this isn't financial advice. I just don't want anybody chasing based on pie in the sky dreams. I know there's a lot of like moon boys on crypto YouTube and Twitter that are like, oh man, you have to buy now. And that's just not my style. You need to have a trade setup. You need to identify risk to reward. You need to manage your entries. There's a lot that comes with that. With that said, I think we're going to 120.
Woo! I love it.
I think we're going to at least double from here. Or I guess 120 isn't quite a double, but I think that looking at the larger market cycle, measurements prior or comparing to prior market cycles, I think 120 is reasonable. I think 100K is a big milestone and we'll probably overshoot that. There's a lot of confluence at 120. And if we hit 120, that's where I'm going to reevaluate and either take a bunch of profit. It depends on how fast we get there and what's happening if and when we get there, if that makes sense. So that's kind of my next roadmap, I guess, just major magnet. And that's based on some Fibonacci extensions and some measured moves of the prior range, which I go into a lot of detail on our Thursday classes in the wealth building community. So if you guys want to come to that, go to wetalkmoney.com/community and jump in those classes. You can talk to us directly. And yeah, we have much more time to go into depth of those things. But yeah, that's what I'm thinking, man. 120. That's my number.
And yeah, there's been some support from the ETFs this week. It looks like we've had strong inflows again there. And then,
oh yeah, huge, record breaking actually. So yesterday, as Bitcoin crosses 71K, we see over $880 million in inflows, the best day since March. So yeah, a lot of capital still flowing into the ecosystem.
Yep. Yields also coming down on the government bond side. That's got to help a little bit too. So you've got, a little bit less opportunity cost, I guess, if yields keep coming down. So that's also probably a little bit supportive too.
Yeah. And, just taking a look at like the altcoin ecosystem is also still doing well. We've got a pop off of support on the total 3 index, which excludes Bitcoin and ETH. There was a lot of buying in anticipation of the ETH ETF, which we can talk about more in a second. Got other large caps like Solana that are getting some follow through. I had a breakout trade this week on Jasmy, which was or is just a really clean breakout chart, has good volume, market cap, exchange diversification. So I got a pretty good fill on this one and is working to my next profit target up around 5 cents. Yeah, we've just got a lot of movement, a lot of action. Like this has been a fun quarter so far.
Yep.
Trav, let's talk about some stuff that you guys have been seeing in the stock side as well. I know you wrote this for the Doe. Is there value in this hated sector that you've been looking at Edtech? What are you seeing over there?
Yeah, so this is like the upside down of the AI boom. So like if you got stocks like Nvidia and SMCI that have been mooning this year on the prospect for AI, well, this is like the dark world version where everything is down because of AI. And this sector is very hated. So companies like Chegg, Coursera, Udemy, all those stocks are down over 40% year to date. In fact, you look at some of those charts like Chegg and Coursera recently, it's like down almost every single day for the past, 30 or 40 trading days. It's pretty wild to see.
Wow. Yeah. That is beat to crap.
Yeah. And so the reason, of course, one of the big drivers of these stock price declines is AI. AI is seen as a disruptor of a lot of these ed tech companies, and particularly for companies like Chegg. I mean, Chegg provides study tools, question and answer stuff, tutors for students, and particularly in like high school and college to, help them do better on their tests and stuff. And so those tools now can be disrupted by even just ChatGPT. ChatGPT 4 has the capabilities for, a lot of homework help and being able to guide people through problems and help them understand, what they're getting wrong and right, especially with the new ChatGPT 4.0 that actually allows you to upload pictures. You could upload, pictures of equations from your test, and it can help explain the answers to those. And so that means that there's less of a need to pay for products like Chegg. And so Chegg has seen a decline in revenues over the last couple of quarters. And the thinking is from a lot of investors that Chegg could be a zero, that in a couple of years, Chegg will be essentially, unprofitable, no customers, and basically be out of business. So usually with these things, like the extreme versions don't play out that quickly. And even Chegg, I think, could potentially have an opportunity to fix the business over time. There's potential for them to license their content to other AI tools, to even companies like OpenAI, if they decide to in the future. And I think there's still a need for like structured learning plans that aren't just like punching problems into ChatGPT. Now, nonetheless, the question is, what do you pay for it? Chegg's today trading at 4 times this year's estimated earnings, but earnings are probably going to keep falling. So what are you really paying for that? However, if you look even at some of these other companies like Udemy and Coursera, it's a little bit less clear that they're going to be disrupted by AI. Like Coursera offers courses and certifications. And so I think, if AI is going to disrupt all these industries, you could make an argument these companies could eventually benefit. So if you've got to go to retrain for a new skill set or retrain in some new AI-based skill set, where are you going to go? Are you going to go to an expensive 4-year college that's got all these like protests and issues going on? Or are you going to go do something more efficiently through something like Coursera? And so that's where I think like people could be too worried about the near-term impact of AI and not thinking about the long-term potential opportunities that AI brings to at least a couple of these companies. So that's why I wanted to call them out in the Daily Doe as potential, long-term opportunities if we're thinking with our contrarian investor thinking caps.
Yeah, that's a really interesting idea. And I agree with you that like education's not going away. It's just changing. And yeah, the shit that we've seen at the universities this year, if I had a kid getting ready to go into college, I would maybe say, hey, there's other alternatives. You don't want to go get brainwashed and be a part of protests that you understand nothing about. And yeah, there's alternatives. There's ways to just learn from home and communicate through the internet. I mean, that's what we do at the Skill Incubator with the wealth building community is alternative education. Learn from people that are actually doing what you want to do.
Absolutely.
Yeah, good stuff. Nikki, let's talk about the macro picture. I know you've been talking a lot about the consumer and retail side and how, the Wall Street Journal put out this article yesterday talking about how Americans have more investment income than ever. And so there's been a wealth effect, obviously, with the stock market being at all-time highs. What are you guys seeing, though? Because we've also noticed that the job openings, the JOLTS data has not been looking too hot lately. So what's going on with the macro picture this week?
Well, I mean, there is a softening happening. And I think that we've kind of been seeing that happening over the past few months. So I would say there's not a huge surprise there. As far as, inflation and we get the unemployment rate this week, I believe. And retail sales, it's been chugging along, but it's definitely starting to show some cracks. And we got a lot of retail earnings. And there was some good to pull out of retail earnings, and there was some bad to pull out of retail earnings. Kind of was depending on what brand you were looking at. Really, my take on the consumer at this point is they're being choosy. They're using discretion. Certain brands are winning over others, but that's always been the case, like since the beginning of time. And I think that there is an expectation that inflation is going to continue to soften. But at the same time, the persistent stickiness of inflation could be partly due to the fact that you brought up that article that Americans have more investment in income. And this was something that I talked about a long time ago, last year, probably mid-year, how higher interest rates could act as a stimulus, so to speak. A lot of people thought that the stock market was going to be going down as interest rates rose. A lot of people maybe weren't thinking interest rates were going to be that impactful on the economy. But to be honest, I know a lot of people that are raking in the high yield savings account interest right now. They're raking in the interest and they're raking in the gains on the with the stock market at all-time highs. So it hasn't exactly gone as expected. I think the wealth effect has probably propped up, boomers spending, wealthy individuals obviously have been doing okay. We've even seen in fine dining restaurant comps have been pretty darn good compared to the lower end restaurants that have been declining in terms of comps. Saw that through like Darden restaurants and some other restaurants that I looked at. So I think that overall, the lower end consumer is slowing, but we also have that pull of the higher end consumer kind of getting a sort of a stimulus from the wealth effect, higher interest rates that could keep the spending going. So it's a question of who is spending and, what, like, are we looking at a low end consumer or a high end consumer? Like, who is doing the spending and what are they spending on? So that's really what we need to be paying attention to. There's probably going to be like a bifurcation there that's going to lead to some complexities with analyzing it. But I think overall, the earnings have been okay enough to prop this market up. But yet, on the other side, things are weakening enough to give confidence to investors that rates are going to come down. So there's that seesaw effect kind of happening.
It's the soft landing. But I think you made a really good point, Nikki, which is the consumers appear to be a lot more choosy lately. So we've got a lot of signals that back that up. Things like goods spending. Consumers are still heavily spending on services, things like travel. We're seeing TSA numbers and travel numbers still quite strong. But good spending in the manufacturing sector, we saw several ISM manufacturing prints in a row that have been very weak. We've seen regional manufacturing surveys that have been pretty weak. We've seen goods-based companies like Etsy report sales declines year over year. And so it appears that, consumers are certainly shifting towards spending on services over goods. We're also seeing, like you said, some weakness in certain areas of the low-income consumer, but the high-end consumer is actually being helped by high rates. We've seen the Atlanta GDP now, the forward GDP estimates get cut down from +4% to +2% in recent weeks. And so I think there is certainly a softening happening. And I think it is because consumers are being a bit more choosy. We do see the JOLTS job openings data declining, so that it looks like the unemployment or the employment market as a whole is weakening on the edges. There's no major negative shock here, at least not yet. But it is just like a slow, gentle softening of the economy in certain areas that's causing overall consumers to be a bit more choosy in where and how they're spending. And so I think, that could continue. And that's the whole soft landing thing. Things are softening. It doesn't mean we're going into Great Depression 2.0, like some people will make the case for on Twitter. It does set us up potentially for a negative shock if something bad does happen, or if, say the unemployment issues get significantly worse in the coming months. But it's not time to panic. It's just time to kind of look at everything and go, okay, consumers are being rational and choosy, and let's find the pockets where, people are still, or companies are still providing value and still able to grow, because those still exist.
Awesome. So what are you guys looking forward to over the next week? I know we've got several more like big macro pieces that are coming out. Anything, I know employment numbers, anything else that you think people should be on the lookout for?
Yeah, the Euro Central Bank meets tomorrow, and there's some market anticipation that the ECB will actually cut rates for the first time in a couple of years. It would be a small rate cut. That would obviously be relatively bullish. It would be a bearish event if they don't cut. So we'll have to see how that plays out tomorrow. Of course, we have the Federal Reserve meeting next week, and the expectations there are for no change in rates. So there will be likely nothing happening there, but maybe some commentary that could sway the market. So the central banks come back into focus, and of course, anything that happens with GME or weird stuff in the market like that, we have seen quite a lot of interesting price action in stocks, not just in GME, but elsewhere. Like software, like the software sector has been very beaten up over the last week. There were some high profile earnings misses from like Salesforce, MongoDB, and UiPath, and that caused a big software sector sell-off. So we're kind of looking at that sector, seeing if there might be some value emerging there at some point. But yeah.
It's been nice to see Chewy up. That's been, I mean, that's kind of highly shorted a bit, so that helped. But after earnings, that's been one that's been fun to watch.
Cool. All right, let's do some Q&A.
Cool.
First question: when will the ETH ETF start trading, and what effect do you think that'll have on the crypto market? I don't know that we have dates yet. It's going to be Q2 or Q3. And I think, there was a big pop in anticipation of the ETF approval. But we'll have to see what the flows are when they do start trading. So obviously the Bitcoin flows have been record breaking in many ways, and we'll see if the ETH ETFs follow or if they're lackluster. I think that, we had the big pop in anticipation of it before and during the release. I don't know. It's a toss up. We're going to have to let price action be a guide. Okay, Wilson was asking, my strategy, I bought Bitcoin early in 2017, and I take profits into bull markets at arbitrary targets like 10K, 20K, 50K, etc., and only buy Bitcoin if price crashes by 70%. It's worked, but I expect in future Bitcoin bear markets won't be as dramatic. Should I continue or change my strategy? Okay, well,
good question.
That is a good question, and this is not financial advice, but this is how I think about it. Is every market cycle, people say this is the last market cycle. So I don't know when, these market cycles are going to continue to happen until they don't. And I'm not going to try to front run that. I'm just going to say, all right, I'm assuming these market cycles are going to work until something changes. I don't know when that's going to happen. One thing we know for sure is Bitcoin's having 4-year cycle is going to continue. That's not going to change. What we don't know is how capital flow is going to get adjusted, and if people are going to still chase and drive bubbles and bear markets. I can tell you, as somebody who's been in this space full time in Bitcoin for well over a decade now, human behavior does not change. So, the market cycles that I've seen from the early days, the only thing that's changed is the amount of market participants, but people still do the same shit over and over. They buy highs, they sell lows. It doesn't matter how many YouTube videos I do talking about the right way to buy and sell Bitcoin and trade it and invest in it. 90-something% of people will continue to do it the opposite way, which is fine for me because they're on the other side of our trades. So until something changes with either humanity, maybe if AI takes over the markets, but yeah, until something like that happens, I think these market cycles will continue. So if that strategy is working for you, why not stick with it?
I think, can I mention something here just to
absolutely
kind of compare this to the stock market and give some insight? Like with stock market corrections, we've usually, like, normal is going to be 20, we'll call it 30 to 50%, right? That's what we've seen historically. Even we've seen deeper Great Depression, yeah, but generally, like, every market has its range of what those corrections are going to look like. But we have seen since the 2008 financial crisis, those corrections have kind of gotten shallower and shallower from that 50% zone. So, like, I'm wondering with Bitcoin, if as it evolves, is that going to happen where right now you're looking at like 70 to 90% corrections are like the big bad bear, right? So I'm wondering if as it evolves, are those corrections going to naturally get that range get smaller?
That's a good question.
I'd say in stocks, like, the range has been pretty consistent. Would you say, Trav? I mean,
yeah, and I would the main thing that we've seen in the data is that the corrections happen faster in recent years and decades. But yeah, I think other than I think the Great Depression was a bit of an outlier. If you take that out, or if you take, data from the last, say, just 40 or 50 years, yeah, we've seen, like, 30 to 50% bear market corrections, and obviously shallower ones. We have a lot of like 10%, 15% market corrections in stocks, but they're happening faster. And I think the depths of which, tend to be, pretty similar overall. So they're not as deep as Bitcoin, certainly.
right.
And maybe you could make the argument that ETFs and other institutional players and other algo traders will make those dips on Bitcoin not as severe as they have been in the most deep bear markets. But you could also argue the opposite. You could also argue that ETFs exacerbate the moves, just like everyone else, because you see inflows when Bitcoin's up and you see outflows when Bitcoin's down. So maybe they actually pile on. I don't think we know. And like Chris said, if your strategy's working, why change it?
Yeah. And one thing I will say about, like, as the market matures and the market cap grows, yeah, the expectation is that volatility will fall. We really haven't seen that yet in Bitcoin. I mean, I guess it's a little less volatile, but I mean, dude, yeah, the last pullback from the 2021 highs was 77% in Bitcoin. So right now it's at 1.4 trillion market cap. Gold is at, call it almost 16 trillion. So there could be a potential. This is the ultimate, bull case, right? And this is likely not going to happen overnight or even in the course of a few years. But what if Bitcoin does eat gold's lunch and either get to parity or eat a large portion of that? There is potential 10x upside, I think. But even, at my 120 or 150 kind of profit targets for this year, if we do get there, that's going to put us around 3 trillion, which is going to put us in the top 5 of the largest asset classes. Somewhere up there with Microsoft, Apple, Nvidia, or Google. So we'll see. Swayaway was asking, why are you guys so awesome to listen to? Well, thanks for the kind words. I don't know. We enjoy doing this. Thanks for saying that. I don't know. What do you guys think we're so awesome?
Because we're, like, level-headed and we're not hypey? I don't know. Maybe.
I think we'd have a lot more subs if we were more like hypey and doom and gloomy.
Oh yeah, for sure.
Fan was asking, what market cycle is the S&P at now? It feels like there's too many mixed signals in the market. What are your main data points that you're focusing on to guide you through the market besides interest rates and unemployment rate? Yeah.
We are in a raging bull market. I mean, on the technical side, this is a raging bull market. I don't know. Are we late cycle, Trav? I guess we are. I guess we're getting close.
Well, yeah, you could argue we're late cycle, but I think we're looking at a lot of the economic indicators. We actually did a macro class for our community members last week and talked about a lot of the leading indicators that we look at. And so a couple of things you mentioned there, like, unemployment leading indicators and things like interest rates and credit spreads, of course, those are a couple of market-based indicators, but we also watch a few other things. And so nothing, it's kind of like we said a few minutes ago, nothing is like indicating an imminent fall off or crash. We're seeing some softening in a few of the leading indicators. And so that might give us a little bit of incremental cautiousness through the summer. We do have big elections coming up. That could mean more uncertainty and volatility. But, if you're just looking at price action, seems to still be bull market territory. We're seeing a lot of stocks popping still, and corporate earnings growth hasn't faltered yet. So that helps as well. And until we see something that really changes that view, I think we're kind of still in that bull market territory for now.
Yeah, well said. I know last week we answered a question similar to this. Jojo was asking, with MicroStrategy providing leverage Bitcoin exposure, what do you guys think of the idea of playing a portion of this bull market in MicroStrategy? So I'll direct you guys to the last week's episode where Travis actually gave a great explanation of this. Is there anything else that you guys would want to add to it this week that we didn't talk about last week?
Well, there is, something interesting happening on the Bitcoin miner front, which is, I know this doesn't directly relate to MicroStrategy, but, the Bitcoin miners are interesting because, they've been Bitcoin proxies or levered Bitcoin proxies in some sense. And they're starting to get into, HPC, high performance computing, or basically, helping provide infrastructure for these AI data centers. And so that's been kind of a new bull case for some of these miners. If you look at Core Scientific, CORZ, they had a huge gap up this week. They had a big announcement with a company called CoreWeave. CoreWeave's been in the news over the last year for buying tremendous amounts of NVIDIA's GPUs and building new data centers for their new data center clouds. And they've been raising a bunch of capital at high valuations. And so CoreWeave signed an agreement with Core Scientific, the Bitcoin miner, for Core Scientific to provide some of their Bitcoin mining facilities to CoreWeave. And what's interesting about this is the amount of capital involved. I mean, I believe it's like a $3.5 billion total commitment over a 12-year term. So roughly, call it, $250 to $300 million a year, which is not insignificant. But what it also does, it helps Core Scientific and other Bitcoin miners kind of smooth out the cycle. We have these vicious cycles with Bitcoin miners where when we go into a bear market environment with price down, they lose money. They have to find ways to fund themselves. They have to take mining capacity offline. Well, now you can smooth those cycles out by shifting capacity away from Bitcoin mining and to something that's actually still profitable, or even more profitable in some cases, which is the high performance compute market. So they're essentially able to diversify their business into new business lines. And I think that's a pretty nice positive. And I think we're going to see other Bitcoin miners follow suit. I know there've been some smaller announcements from like Iris Energy, and a couple of other Bitcoin miners, but I think we're going to see these announcements escalate now that we've seen this big Core Scientific announcement move that stock so much. I think we're going to see, I'm sure Riot and Mara are going to try to get into the game as well. So look for that. It doesn't mean you need to buy these, at any price, but I do think it's an interesting development in what we would call, stocks that are Bitcoin proxies.
Great answer, man. That's nailed it. Love it. Nikki, there was one thing, I know we're not going to be able to get to all the questions this week, but there's one thing I wanted to pull up, a tweet that you sent out that I thought was just money, and wanted to talk about I think you did a video on this too, but 4 mistakes that you see DIY investors make.
Yeah.
You want to talk about this a little bit?
Yeah. Basically I was just, obviously we all, talk to a lot of do it yourself investors. That's what we do in the communities, give them the education, help them learn how to invest better. And then also as an advisor working with people doing portfolio reviews, I see a lot of stuff that goes down in terms of issues in the portfolio. And I think that I just thought it would make a good conversation addressing some of these. I think the first one, being too focused on a dividend strategy, is a big one. I think a lot of people, you've got the dividend guys, the dividend heroes, all of them on Twitter. But I think being too overly focused on dividends can end up kind of hurting you in the end. I think there's a time and a place for dividends. And it's a specific strategy that is very different from growth. So if you are looking for growth, if you're young, you don't want to be overly focused on dividend investing, because you can end up hurting your returns in the end, especially risk-adjusted returns. So I did a piece in the Daily Doe about that specific topic. So if anybody wants to read that to dive in more, check that out on today's Daily Doe. And then owning individual stocks with crappy fundamentals. Oh my goodness. I see this all the time, especially when people give me their Robinhood portfolios and I look at them and it's just like, oh my gosh, you need the stock geek in your life. Anybody that is trying to stock pick, winging it, I see it all the time. Their picks are all weak, terrible companies. And you have to understand fundamental analysis and if you want to have a decent portfolio. So check out the wealth building community for that. Trav has so many resources, but it's a huge mistake I see when I review people. The third thing is not having an asset location strategy. So yes, certain assets do better in different types of accounts. So it's very important to have a strategy in place for tax savings over your lifetime and maximizing gains, right? And then overlapping holdings in ETFs, that's a big one. People don't get the diversification that they think they're getting because they have all these ETFs in their or mutual funds, and they're all invested in the same thing. Top 10 S&P 500, companies. Yeah, you think you're getting a special kind of thematic ETF, and then you open it and look at the holdings, and you're like, wait a minute, this is just the S&P 500 fund. So what is this? So I think it's important to pay attention to that. I have a lot of resources in the wealth building community teaching people how to pick that apart and research that. But those are the top 4 mistakes that I see a lot of do-it-yourself investors make.
I love it. Yeah. If you are a do-it-yourself investor, I would encourage you to check out Nikki's new book, Do This With Your Money. You can go to dothiswithyourmoney.com and you can either buy it on Amazon for like $20, or if you go to the website, she has it set up for $7.95. So definitely worth a look. And yeah, with that said, guys, also I popped up on the screen here. You can go to wetalkmoney.com/community to check out the wealth building community. I know for me, looking over the next week, the biggest thing is just focused on this Bitcoin 72K zone. That's all I give a damn about. I don't care about politics. I don't care about potential bird flus. I don't care about global warming. I just care about this Bitcoin breakout. Let's go, baby. Outside of that, I mean, if there is anything that people should be caring about, what else is out there other than the jobs report on Friday?
The S&P 500 breakout, duh.
What's that? SN what? Five
Gosh,
what?
it's not all about Bitcoin all the time.
Yeah, I mean, dude, look at just the indices are, look at that. I mean,
this thing is about
little cup and handle.
Yeah, it's about to blow all the bears' faces off, I think. It's literally the run that keeps on giving.
I mean, the NASDAQ is also up big today. I believe the QQQs are at all-time highs. Big tech still rolling. I don't know how they keep putting up such high performance every year.
I know. And it is a little freaky, right, Trav? It's a little like you got to kind of put the guard up a little bit when it gets this way.
Another gap and run on NVIDIA. When is this going to collapse, and what's it going to collapse to?
It'll collapse when nobody's thinking about it or expecting it.
Well, we did maybe get a top signal with the CEO, Jensen Huang, signing someone's tits the other day.
I saw that. Yeah, that could be.
Happy Gilmore style.
Yeah, man. That's how you know you made it.
He's living his best life right now. Are you kidding me?
He's a hero. Everybody loves him.
Yep.
Oh, man. Awesome. Well, guys, thanks for joining us. That's the hour. We'll go ahead and wrap it up here. You know what makes this show awesome? Travis and Nikki. That's what makes this show awesome. They drop so much knowledge from a professional investor standpoint and a CFP / investment advisor standpoint. And then you got me, this crypto degen, just trying to organize the conversation. So thanks guys for all that you do. And
thank you.
You do great.
The trifecta.
That's right, man. And yeah, if you guys haven't already done so, please leave us a review on your favorite podcasting platform and go to youtube.com/We Talk Money. Subscribe to the YouTube that a lot of people still don't know about that haven't come from my channel for some reason. So go check that out. Check out the community. Get Nikki's book. Any other call to actions, or is that it?
No, that's it for now.
All right.
That'll do it.
Well, thanks guys for listening. Share this with somebody that needs to stop losing money in stocks or crypto.
Yeah.
And we'll see you next week.
See ya.
Cheers.